market update session with Mr. Clarence Chee, the fundamental and technical experts, the coach and also the trainer for Southeast Asia, right? And today we have interesting topic for May. We would like to find out, lately there's a geopolitical heating up, and also COVID seems to be coming for the new wave. And how would that really affect the probably the FX market, which is the most popular, and perhaps even into metals like gold, silver? Would there be a rush to suddenly shoot up the gold pricing again, or perhaps even the stock market? Let's hear from you, Clarence.
Okay, first of all, the currency markets, mainly the US dollar. US dollar nowadays move according to news and yield. So it's more, recently been moving more according to the yield. So technically, or rather fundamentally, US dollar should be weak, but because of the 10-year Treasury yield has been spiking up, so the dollar has been strengthening. Like I said, 2 weeks ago, what happened is that the yield actually went up to as high as 1.7, then later on came back down to below 1.6. And then last week, it started to move up back to above 1.6% again. So as long as the yield continue to rise and recover, we find that US dollar will continue to remain strong, and this will spook the US market. Because the US market, every time when the yield goes up, is basically indication of inflationary. So despite the fact that Jerome Powell, the Fed chair, has been assuring the market that interest rate will not go up this year, and unlikely maybe even next year, 2022, but then the market doesn't seem to believe what he said, because inflation is something that is very real now. Okay. Even in the US, in China, and even in Singapore itself, inflation is actually rising. So, in other words, the yield will continue to rise. As long as the yield continues to rise, what happens? That means the dollar will continue to strengthen, even though fundamentally it should weaken because of the huge debt that the US has been accumulating, especially under Joe Biden. He has so many programs coming out that in need of money. Okay, so the main thing is the inflation. So as long as the inflation is real, despite regardless of what Jerome Powell said, that even he says that interest rate is not going to remain, it's not going to increase, but then the market will never believe him. So because of this, we find that the Nasdaq, the S&P 500, the Dow Jones, even though they hit intraday record high, but they always come back down and close at the low for the day. If you look at the Nasdaq 100 chart, you can find that it's actually trending sideways. S&P also more or less trending sideways so far. Dow Jones has also been trending sideways for, I think, about 2 weeks, although it can hit record high, but it's not able to sustain. So what happened now is, including China, is any good news means economic news, showing strong recovery, is actually bad news for the market. Why? Because any good news means what? That means it's time to normalize interest rate. That means interest rate got to go up. Especially for China's side, that means liquidity will have to be withdrawn by the central bank. What I'm trying to say is that the stock market itself has been on steroids since last year March. Okay, so now the body is recovering. So the body becomes healthy because of the economic recovery. That means what? The central bank is going to stop all the steroid, which means the market doesn't like it. Because so far it's been supported by liquidity. So this is the strange thing about the stock market today, is that despite the fact that the economy is recovering, but it does not like the idea that the liquidity will be withdrawn. Okay, so any yield, as long as the yield goes up, it's good for the dollar because the dollar will strengthen, but it's bad for the stock market because it's an indication that interest rate may go up soon. Now let me add on something about the 10-year Treasury notes. Why is it that the market is focusing on the 10-year Treasury yield and not 5 years, not 20 years, because in the US housing loan usually take 10 years to pay up. So the yield for the 10-year Treasury is also act as a benchmark for the housing loan interest. So if the interest rate goes up, means the housing loan interest rate will also go up. That is bad for the market.
Interestingly, Clarence, it seems to last few weeks it seems like the US dollar has been trending down.
Not really trending down, and then after that, I think late last week it started to recover back.
Oh, okay.
If you look at Aussie dollar seems to be trending sideways. You know, Euro went up. I think Euro is the strongest among all the major currencies, as well as Canadian dollar. So if you long Euro, you take profit. You know, it's good. You short dollar cap. US dollar against Canadian dollar is good, but the rest, like pound dollar, it doesn't seem to have strength going up. Goes up halfway, then it starts to come back down. Aussie dollar is trending sideways. Kiwi doesn't seem to be going anywhere. So if you want to long or you want to play the forex market, I would suggest you focus maybe long euro dollar, short dollar cap. But you need to see dollar yen. Dollar yen seems to be recovering because Japanese yen usually is weaker than the dollar. So dollar yen on a big trend is still on an uptrend, but you need to be very careful of the correction.
Right.
Yeah.
That's interesting tips for me on the FX market, right? And okay, let's check out on the. Have you mentioned about gold?
Okay, gold again is depending on the yield. Okay, so if the dollar strengthens, then gold start to come down. Of course, if you look at gold and silver on the weekly chart, okay, you look at a bigger picture, you find that it's basically on an uptrend, but it's on a gentle uptrend. Which means that, but then because of the volatility of the 10-year Treasury yield, what happens is that you can buy the spot gold, but your stop loss will be very huge because you need to give a lot of room for the volatility. Because the yield itself, the 10-year Treasury yield has been very volatile, so you find that gold itself will be very volatile. So you put a very tight stop loss, your stop loss will be hit, filled, and then you find that gold eventually will start to climb back up again. So it's very frustrating. So I would, if only you can afford to have a huge stop loss for gold, then you can go for it, to long gold.
Huge stop loss meaning like how many pips estimate range?
Okay, the support for gold basically is at 1,700. Okay, 1,700, so you will be quite big lah. Like I say, you know, maybe 1,750 and below. Okay, 1,750 and below. Basically, gold is on an uptrend for a very simple reason is if Jerome Powell says that he's going to keep interest rate low, assuming that he will keep his word to keep it, that he will maintain interest rate low, but then inflation is rising. You know, inflation is rising, so which means that interest rate will not be high enough to hedge against gold. I mean, hedge against inflation. That means what? People will start to buy gold to hedge against inflation.
Right. Okay. So watch out if you are looking into trading gold as well, right? For this week, or in fact for the May itself, right? Okay, let's take a break and we'll come back again for the next questions.